The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
Good morning, Long Island. You're listening to Money in the Morning with Mitch Goldberg on 103.9 FM LI News Radio. We are so appreciative that you are spending your valuable time with us. So thank you very much. We begin the day with the Dow futures down 281, S&P down about 30, NASDAQ futures off a little, about 0.28%. In the greater scheme of things, it would be hard to tell, but the stock market is actually up ever so slightly on the week. You wouldn't know it based on all of the news about the banks, about First Republic, about Silicon Valley Bank. And I've been talking to you about this ad nauseum, just explaining and getting into this. I would love to see this story go away soon because there are other things to focus on. And 10 years from now, the thing that counts is what you did with your money today. Did you stay invested through this tough time? Did you invest consistently in your retirement plan? These are the things you can control. And you should control. We have no control over these banks. First Republic, the big news is yesterday, a consortium of banks actually made a huge deposit of $30 billion into First Republic. The stock was down a lot. It wound up being up for the day. Last night, after market trading was down, and now it's up 10%. So if you want to get a view of what it's like, of what First Republic Bank is, how it's doing, I don't think you should even bother looking at the stock because it's so erratic. I'm not even going to use the word volatile. It's so erratic that it doesn't really tell you anything. Okay, so based on the futures today, well, we're on the bubble if we're going to have a flat week, up week, or down week. We shall see. And I have a special show for you today. Okay, this is not something I get to do every day, so just stick with me here. I have James Madore, economics writer, on the economics beat at Newsday. He is a writer par excellence, and if you have been a Newsday reader, he's been there for something like 20 years. And I read his articles, and I reached out to him, and he graciously accepted my invitation to join me on the show. And he's right here. He's actually right next to me. Good morning, James. How are you?
Nice to be with you, Mitch.
I'm so glad you decided to take this time out. I want to talk to you about the banks because you are the one at Newsday who's actually writing about it. And I actually think it's harder to write about something than to talk about it. So it just seems like this came out of the clear blue sky. Everything was fine. Last Thursday, a week and a day ago, all hell breaks loose. And what the heck happened? Like, banks are good. Now banks are bad. What's going on?
You're exactly right. It did come out of the blue. It surprised, I think, everybody. I recall on Sunday night, late Sunday afternoon, we get an announcement from the New York State Department of Financial Services. To be honest, it was frankly a little confusing what they were talking about. And then about 7:15, we get an announcement from Governor Kathy Hochul, which was much clearer. And frankly, at that moment, I called up my editors and I said, we need to do a story. We need to do it now. And it needs to be in Monday's newspaper. And so then I hit the phones with a number of my colleagues. Some of the editors are going through material. We're getting background information. And in 30 minutes, we have a story online, newsday.com, and then in the newspaper. A good example of where when breaking news happens in an organization like the one I work for, it's not one person doing something. It is a team of people, in this case, 15 people, to produce a story in 30 minutes. Then, of course, Monday comes, and I had the opportunity to go to the Signature Bank branch in Woodmere. And it was fascinating because I've never covered a bank crisis before. The last major financial crisis we had was in 2007. I happened to be the Albany bureau chief of Newsday at that time. So I only covered it from the impact it had on state finances, which is different than what we're talking about today.
Sure.
It was very interesting to talk to depositors at Signature. Signature is a bank that serves small businesses, commercial real estate companies, and cryptocurrency investors. It is not a Main Street bank that represents mom and pops. And it was interesting to talk to the small business owners at this bank. There was no panic. There were no tears. There was no mad rush to get to the teller. But people were taking money out. They weren't closing their entire account. And I asked them why. And they said, because the president of the United States has come out and said our bank accounts, no matter if it's higher than $250,000, will be protected and will be honored. And that led me to realize that what the president says, what the Treasury Secretary says, does have an influence here. People are nervous. And of course, now we're seeing a much larger bank, Credit Suisse, one of the world's largest banks, experience major financial troubles. We're seeing First Republic. One of the interesting things here, though, the difference, right, between a Credit Suisse and a Signature and a First Republic, who their customers are. Credit Suisse has a much broader customer base than
Well, sure. Credit Suisse is a commercial bank. But back in the day when I got into the financial services industry, late 80s, Credit Suisse was a world-class organization. Today, they've lost that world-class status years ago. They've just been a problematic financial institution for all kinds of reasons for the last 20 years, even further. But they are still a very big global bank.
Yes, and therefore people are watching closely. But one of the things I think should give people at least some feeling of assurance is that unlike that famous scene that we see in It's a Wonderful Life, when the depositors rush to the Bailey Savings and Loan to take their money out, there weren't the safeguards in place then as there are now. And we are seeing coordinated efforts. The Federal Reserve, the FDIC, the Treasury Department, and now, most importantly, with First Republic, you're seeing government and large financial institutions coming together to ensure that First Republic doesn't go under.
Public-private partnership.
Very much so. Very much so. And it was interesting to see. It's really Jamie Dimon and Janet Yellen working very closely together because it's in everyone's interest that we do not have systemic bank failures.
Jamie Dimon always seems to be part of these solutions. You just have to believe that some administration down the road is going to tap him to be Secretary of the Treasury.
Well, he has been approached numerous times before.
Why would he leave that great gig he has as being the CEO of J.P. Morgan, the biggest bank in the world?
A lot of people say, some people call him the world's banker. Some people call him America's banker. But one of the things I think is very interesting and should be reassuring to people is that he clearly has a good working relationship with Janet Yellen. So the United States government and the private sector, the banking sector in this country, are working together as best as they can to try to reassure people, both the small business, the investor, and the regular depositor.
And that's what it's going to take. This is too big of a problem to just rely on one party. I don't think the public has a taste for a massive government bailout.
That's true.
Okay.
That's true. And Joe Biden has said no taxpayer dollars are going into this. These are the fees that the banks are paying into the system. Now, one of the key issues, Mitch, is the Federal Reserve is going to have to re-examine all the tests that were put in place after the last banking crisis.
A whole new set of regulations. This is expected, in my opinion, it will raise the cost of banks, which ultimately that's passed on to the consumer. But if that's what we need because our banking system is so big, then so be it. I think people will be okay paying a slightly higher premium price for the safety.
One of the things we on Long Island should be looking at is the availability of credit for small businesses coming out of this, because 90% of our economy is made up of businesses that have fewer than 20 employees.
You beat me to the punch. So because when you hear people who say, let the bank fail, let them go under. you have to think who this affects, which is a lot of our listeners. Try getting a home equity line of credit if the bank fails. Nobody's giving it to you. It's not like you could just go to another bank, because banks will make their credit requirements so stringent, and it'll take so long to get a loan because there'll be fewer bankers, fewer underwriting departments.
You're exactly right. Right.
Hey, everyone, this is just a fascinating conversation. Stick around. We'll be right back after these brief messages for the second half. We're going to get into some more questions, and I want to talk to James about automation, the windmills that we're going to have off the coast of Long Island. A lot of good stuff coming to you. 103.9 FM, LI News Radio, Money in the Morning with Mitch Goldberg. Stick around. More great conversation coming your way. Be right back. Welcome back. You're listening to Money in the Morning with Mitch Goldberg. We're going to try to squeeze in every second of this great conversation we're having with James Madore on the economics beat at Newsday for 20 years plus. Albany Bureau, he's, I don't want to say too much, but let me tell you, he's a seasoned veteran, Columbia School of Journalism, Washington University in St. Louis, and all kinds of accolades, but the most humble guy in the world. And he's sitting right next to me. We were just talking about banks and business and credit and how important this is, especially to Long Island. Okay, because that's the gist of it. We are a Long Island station, and we are a Long Island family, okay? But I want to get into a little something else. James, you wrote an article about automation and the time when it's hard to find employees, and you spoke to a number of companies, including Verint Systems, a publicly traded Long Island company, and you had a few things to say about this. So, how far along is automation? How fast can it replace people, or is it just going to take away bad jobs and open us up for better, newer jobs, which, by the way, has been the trend for the last 200 years in America?
So the article was about how automation is being influenced by increases in the minimum wage. And specifically, the Federal Reserve Bank of New York does surveys every 2 months with a representative sample of manufacturers and service firms in our state. And they asked people, when we increased the minimum wage, as we did to $15 an hour a few years ago, did you increase automation? 4 in 10 factories said, yes, we increased automation on our production lines. 2 out of 10 retailers and service firms did the same thing. Now, why do we care about this now? We care about it now because in Albany, literally right now, the New York State Senate and Assembly and Governor Kathy Hochul are discussing another increase in the minimum wage. There is a disagreement. Earlier this week, the one House bills came out from the 2 houses of the legislature. This is the negotiating stance of the legislature as opposed to the governor. As you know, the governor wants to tie future increases in our state minimum wage to the inflation rate. The legislature is saying, specifically, the Assembly Democratic majority is saying, we would like to first raise the base minimum wage above $15 an hour and then index it to inflation. Now, we'll have to wait and see what happens. But at this point, it does appear as if there will be some type of increase in the minimum wage above $15 an hour. And I would just remind the listeners, you may remember, we just got to the $15 per hour rate.
It just started
last year.
Yeah, it just started. It's brand new. But, well, I could get some flack for this. My issue is when you tie it to inflation. Because I know the effects of inflation because as a financial advisor, I explain to people that when I show them what even a little bit of inflation does 20 years out, 15 years out, 10 years out, it is huge thing. And I'll give you an example. A client of mine just told me he's going to start claiming Social Security. He's about to turn 70, and he's going to get about $56,000 a year in Social Security. And he's like, I had no idea it would be this much. I thought I'd get maybe 25, 30. I said, well, that's because you've been getting these COLAs, these cost of living adjustments on top of cost of living adjustments. But it eventually will make, with back to minimum wage, it'll eventually make minimum wage, like, in the not too distant future, $30 or higher. And then what do you do? Then that really accelerates automation, no?
Well, we'll wait and see.
Or am I being paranoid about that?
I think, automation is not a solution to everything. There are some manufacturers on Long Island who have been able to do it very successfully, and they're strong companies. And we need to remember, we still make products on Long Island. We sometimes forget that we have a manufacturing sector that employs more than 70,000 people. So we still make things here. And some companies, it makes sense to automate. Others, it has not been as successful as they had hoped. The thing about the minimum wage is it's a very complicated issue. It isn't just about raising the wage of the workers. It's also about, well, how does this flow through to the consumer? Will the consumer will have to pay more for the product and service because the wages of the employees has gone up? So we'll have to wait and see. I mean, one of the things that is a concern for the business community is, will there be a robust debate in the legislature about the full ramifications of raising the minimum wage? And I'll give you an example. If you talk to our farmers, particularly on the East End, they now pay the minimum wage. They were exempted from the minimum wage until very recently. They now pay overtime. They've never had to pay overtime before. It is having a dramatic effect on our farming community. And frankly, the state did not realize this impact would happen.
Well, I take it it's a negative effect.
It is a negative effect. And in fact, the state right now is trying to provide tax credits and other incentives to help the farmers offset the negative impact of having overtime for farm workers. What are most farms doing in terms of the overtime rule? They're making sure they don't hit that rule, that they don't have to pay overtime. And some workers, not all workers, are saying, I would have preferred to go back to the old way because I need the income. I need the income so I can send it back to my family overseas and to support myself. So in other words, there are hidden consequences to all of these policies. And one of the concerns I hear from business people all the time is the legislature, is the governor looking at the full impact before they enact this legislation?
It's complicated.
Very.
Yes. I want to ask you to switch gears here for a second. Windmills. You wrote an article about the windmills, and we talked offline before how important it is that when you have these developments, how important it is for them to make sure that they educate the local community that they're benefiting us, that we're putting windmills off of our Long Island coast, that we actually get the benefits for our businesses. So how many? I think we're going to get 5 windmills.
Right now, right now there are 5 windmills that have, they're wind farms that have been approved by the federal government first and then the state government. And in each case, the state signs a contract with the wind farm developer that stipulates that a certain percentage of all contracts must be awarded to businesses that are in New York State. So the 5 wind farms together that we have been approved must spend almost $4 billion with businesses in New York State. Now, that's in the construction phase all the way through to the 3rd year of operation. And I'll give you several examples of companies on Long Island that have won contracts. So, for example, Hoagland Group in Melville, they actually did the construction for one of the wind farms' trench and the installation of the cable from the shore to a substation. This is for the first wind farm, which is going to come into operation at the end of the year. It's called South Fork. We have a company called Roman Stone in Bayshore. They make concrete mattresses that protect the cable on the seabed. They have about 60 employees. Hoagland Group has about 1,000 employees. A small company in Yaphank, they have 5 employees. They want a contract to provide rebar for the concrete that is poured into the trench where the electric transmission cable goes. So there are real opportunities for businesses of all sizes. And the fact is, $4 billion is on the table for New York State businesses. And it's just starting. Construction is just beginning on the first wind farm.
This is fascinating. Unfortunately, when we hear the music, we have to bring it to an end. You are listening to Money in the Morning. My special guest today is James Madore of Newsday. Go to newsday.com or the Newsday app. Search James Madore. Read the articles he writes. They are fascinating. They're informative. It's just fantastic. So what's your Twitter handle?
At James T. Madore.
At James T. Madore. Madore. Okay, M-A-D, like David, O-R-E. 103.9 FM, LI News Radio. For more information about us, check out moneyinthemorning.info. Be back Monday. Have a great weekend and happy St. Patrick's Day.
Securities and investment advisory services are offered through Next Financial Group Incorporated, member FINRA SIPC. Client First Strategy is not an affiliate of Next Financial Group Incorporated. All the views expressed are those of Mitchell Goldberg and Client First Strategy and not those of Next Financial Group Incorporated. The views are general in nature and not intended to be investment advice. Any discussion of individual securities should not be construed as a recommendation or solicitation by our presenters. Next Financial Group Incorporated does not provide tax advice.